Of course, as usual, there are a lot of things going on around, and Edward mentioned them even before we discuss whatever the macroeconomic picture is, right? One of those things is the fears of a hard Brexit, right? Sorry. Last Friday, we have a wild swing in the pound. It lost average 700 pips in a matter of minutes at the beginning of the Asian session. Uh, they're still talking or discussing whether it was an algo trading, a fat finger, thin volumes, or a combination of all of those. The fact is that the sentiment towards the pound is negative, and although we should not expect much more of this kind of wild swings, indeed the pair is poised to extend this decline, and the pound will probably remain under pressure, right? Because of fears of uh, how the Brexit will result and which will be the consequences. There's a lot of uncertainty. We had a couple of weekends ago, not this one, but before the previous one, we have news from UK Prime Minister Theresa May, who said that she plans to launch Brexit by the end of March next year, right? And well, there are some headlines today pointing to the case that, in fact, to trigger the Article 50 of the Lisbon Treaty, the UK needs a parliament approval, Um, and there, as I was saying, there are some headlines today suggesting that they may appeal. The government will go directly to the court, right, to avoid going through the parliament. If the UK decides to go through the parliament finally, uh, it has to visit different chambers, come back and forth. That means that it will take a year or something like that to even start triggering the Article 50, to discuss when to trigger the article. So that will prolong uncertainty, in my view, and probably mean that the pound will be under more pressure. Indeed, a hard Brexit, which is the UK also leaving the common market, the single market with the European Union, indeed will harm the economy to limits we don't know these days, right? So there are different business organisms in the UK pledging to avoid that kind of event, but still, Theresa May keeps saying that Brexit means Brexit. So I guess that's a combination of all those factors that is weighing sharply on the pound. Uh, Anyway, the market will see any kind of bounce or recovery as an opportunity to sell, no matter how USD came out. I believe I said this past week. No matter how the US performs, the fact is that the pound is bearish and will remain so for a couple of months, because I don't see how they clarify the situation in a couple of months. In fact, I don't see how they can clarify the situation until the Brexit launch, whether in March next year or even after that. Anyway, sorry, that's just a personal view about how the market feels about the pound. The other factor that the market is pricing in these days is a probable picture of Mrs. Clinton in the US. You know, I don't have political sites, less in a country that I don't belong to. But as for what we could see in the media these days, the fact is that the scale has leaned toward Clinton's side after the two presidential debates. And while this is not, none of those debates has been a game changer for 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 the final result of the election. Sorry, that's what I'm trying to say. The fact is that um, Ms. Clinton is seen as a more stable person, and that she will keep on with current policies. It won't trigger new measures that can affect the financial market, nor the commercial relationships of the United States. So overall, it seems a bit more dollar positive than, than Mr. Trump, who is a wild card. It's a wild card. The market is not sure how he will handle relationships with China, with Russia, with Mexico, and whatever other country around the world, and why he will do that. And the case is that if somehow things point for a Trump win, we can see a lot of risk aversion across the board, right? So we are having risk appetite and moral strength at the same time, uh, based on the election, the second debate result, right? That in fact it's a combination of both.